Relief rally in pre-holiday markets sends the dollar lower. Global equity markets started the week on a weaker footing amid a combination of worries about the spreading Omicron coronavirus variant and tighter monetary policy. Surging Omicron cases triggered tighter restrictions in several countries, threatening the global economic recovery. As such, the Netherlands went into lockdown and other countries began to follow. Wall Street stocks slid on Monday amid reports that the strain had been found in 43 out of 50 U.S. states already, raising worries about the outlook for economic activity. The next day, however, risk sentiment improved, with Asian equities rising after the Japanese government raised its overall economic assessment for the first time in 17 months, citing the services sector underpinned by easing coronavirus restrictions. Furthermore, U.S. stocks posted solid gains on Tuesday following a three-day losing streak after Biden said that the federal lockdown recommendations aren't exactly in the cards so far. Also on the positive side, Nike stocks jumped more than 6% after the company reported stronger than expected fiscal second quarter earnings and sales, pointing to still robust consumer demand in the United States. Omicron shares rallied nearly 11% as the firm topped expectations for quarterly profit and revenue. Following initial gains, Asian stocks gave up most of the early gains as virus-related concerns continued to deter buyers. The Shanghai Composite Index finished just below the flat line, the Nikkei 225 in Tokyo advanced less than 0.2%, and the Hang Seng in Hong Kong rose 0.57%. In part, risk sentiment has deteriorated after China announced sanctions on 4 U.S. government officials. In Europe, stocks ended on Wednesday at a near one-week high, with the Pan-European Stock 600 climbing 0.8%, Germany's DAX 30 gaining nearly 1%, and even with its government set to introduce new measures to curb the spread of COVID-19 before New Year's Eve. Wall Street equities extended the ascent on Wednesday, with U.S. markets rallying for the second straight day amid the dramatic decline in Omicron cases in South Africa. Also, investors cheered the development of a more comprehensive vaccine by the Department of Defense and the authorization of a Pfizer antiviral pill by the Food and Drug Administration. On the data front, the GDP grew 2.3% quarter-on-quarter in the third quarter, while existing home sales were at 6.46 million for November, and the Conference Board Consumer Confidence Index was at 115.8 for December. Against this backdrop, the Dow Jones Industrial Average rose for 0.74%, while the S&P 500 gained 1.02%, and the Nasdaq Composite added 1.18%. Following 2 consecutive days of positive momentum, Asian equities were mostly higher on Thursday, with the MSCI's index of Asia-Pacific shares outside Japan gaining 0.70%. The Nikkei 225 climbed 0.83% after Japan's upward revisions to GDP and dovish comments from BOJ Governor Kuroda. China's Shanghai Composite edged up 0.15%, while South Korea's Kospi was up 0.32%. In currencies, the dollar continued to lose ground versus high-yielding currencies as risk sentiment continued to improve. The Euro-USD rallied to the 1.1340 area, extending gains for the 4th consecutive day on Thursday. The buying pressure surrounding the common currency has intensified after the Governing Council member Robert Holtzman said that the bank could raise rates as soon as the end of next year. Meanwhile, oil prices exceeded the $75 figure to extend the ascent to 10-day highs around $75.77 on Thursday due to a weaker dollar in combination with upbeat risk sentiment. Also, a larger-than-expected drawdown in U.S. inventories helped to ease worries about the likely hit to economic activity from the spread of the Omicron coronavirus variant. The Energy Information Administration reported crude inventory declines by 4.72 million barrels last week. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.